We're clearly in a rental crisis with skyrocketing rents as well as low vacancy rates and no end in sight, as Dr. Andrew Wilson and I are going to explain in this week's Property Insider video. We'll explain to you a number of the factors creating the rental crisis at the moment and have a bit of a chat about the build-to-rent phenomena and will it actually make a difference to our housing markets. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. It's well known that Australia is in the middle of a rental crisis with not enough accommodation, historically low vacancy rates and skyrocketing rents. The recently released national accounts showed that Australia's population has grown by around 620,000 people in the past financial year. That's the highest number on history, and interestingly, 100,000 more than what the May federal budget predicted. This record 2.8% expansion of the 15-plus age group of our population is placing a great strain on our rental markets. And the number of overseas students and also people on graduate visas in Australia has increased considerably by actually over 300,000 in the last financial year. What this means, when you drill down into the figures, I was surprised to see that around 1 in 10 people in Australia currently are a temporary migrant, visa holders and student visas. Now, of course, this explosion of temporary visa holders was being led by international student numbers, and that's good for our education system, and one of our biggest exports is education, but it's placed a huge strain on our rental markets. So to give us an update on the latest My Housing Market Rental Report, I'm joined by their chief economist, Dr. Andrew Wilson, in our weekly Property Insider chat. Hi, Andrew.
Yeah, good day, Michael. And another month, another bad news story for tenants. I mean, we get a little tired, perhaps, of the consistency of the issues with our rental market. I mean, we've had some sort of good news on the policy front over the last month, but in terms of government's attitudes towards the rental crisis, but there's certainly no relief coming through in terms of what's actually happening in the rental market. I think it was very interesting what you said, Michael, about the student visas. Unprecedented numbers of student visas now, or temporary visas, which basically means student visas. And of course, that's going to put a lot of pressure on our rental markets. And maybe we saw the first sign of that with the August results, Michael. Not so much in rents, but in vacancy rates. We really saw a significant collapse in vacancy rates, which are already near record lows, and that had just shown some stabilising through June. But of course, the university semester starts in August, and a lot of internationals would have been focusing on getting into Australia for the beginning of that second semester, or the last semester, or whatever it is, the mid-year semester. And what we saw with, as you said, the latest report, August rent report from My Housing Market, was, as I said, a collapse in vacancy rates, where there's a real shortage now of houses and units for rent. And all capital cities recorded lower vacancy rates over August compared to July, with the exception of Darwin, which was flat. Vacancy rates low, increased demand, particularly from students. We're also continuing to see upward pressure on rents, no surprise. I think it's being restricted by financial constraints. You know, people can't keep paying high levels of rent increases. It's dependent on their wage increases, of course, their capacity. We saw Sydney house rents just ease a little bit over the month, but still $750 a week. Sydney house rents are the highest in the country of all the capitals. All the other capitals, with the exception of Perth and Hobart, recorded increases in house rents over the month, and Melbourne up by 1.3%. The yearly results, the annual results, now have Melbourne up by 18.4%. Of course, you know, Melbourne's rents are still the best part of $200 a week lower than Sydney's, but have still increased by 18.4%. I think there's plenty of upside for Melbourne house rents. And as I mentioned before, vacancy rates are at record low levels, basically reflecting a lack of property available for tenants or for new tenants. Similarly, with units, Michael, we saw vacancy rates collapse or fall in every capital city over August compared to July. Again, of course, we would suspect that most students would be looking at units rather than houses for their rental focus, but certainly vacancy rates down sharply in units over August compared to July. In terms of rents, we saw Melbourne unit rents just ease a little bit by 2.4% over the month. Sydney was flat, Hobart was flat, Perth up 1.9%, and Darwin, which of course is quite a volatile market, low observations, up by 7.8%. But the annual growth in unit rents is still quite spectacular, Michael. Sydney up by 30.9% for unit rents over the past year. Melbourne up 28.8%, just a tick under that 30% mark. And Brisbane unit rents, which eased just a little bit over the month, down by 0.8%, however, have still increased by 22.9% over the past year. Melbourne's vacancy rate still remains the highest of the major capitals there at 1.4%. So still offerings for units in Melbourne, but I would suspect that won't last for too long, particularly as momentum grows in student demand for apartments in Melbourne, of course, which has a very significant education sector and is certainly geared for international students. And I would suspect that we've got lots of upside, or plenty of upside, not just for house rents in Melbourne, but also unit rents in Melbourne as well.
Now, the media makes a lot of fuss about these skyrocketing rents, but they didn't make a fuss when landlords had to reduce their rents over COVID, or if you look back over a decade and there were periods of years when rents were flat. So over a decade, rents are really just catching up with inflation. But the government's got a solution, Andrew. They said, we're going to encourage big businesses and superannuation funds to build large complexes and provide affordable accommodation in the areas where people want them, in long-term accommodation. And we're going to give these companies significant tax benefits, and that's what's called build to rent. But a recent report by Knight Frank showed that at the moment, there's only 8,350 build to rent properties under construction around Australia. A further 12,900 have been approved in the near term, but approved doesn't mean they're going to come out of the ground for some time yet. And they're suggesting that by 2030, there'll be 55,000 of these units constructed. If that even does eventuate, that's only going to make up 1.5% of Australia's total rental supply. In other words, it's not going to move the needle. And in my mind, Andrew, they're unlikely to offer what the government's looking for. I guess what we're all looking for, affordable accommodation.
Yes, Michael, just accommodation, full stop. But my thoughts have always been, my view on build to rent's always been clear. It's obviously an opportunity for big business developers to get their hands to some degree on the public purse to be able to support their developments. Of course, these developments will only work with significant concessions from government. And the question is, well, maybe governments would be better off just biting the bullet and putting the resources directly to social housing and just leave it at that, rather than putting the money into the pockets of developers. It's not going to make any difference at all to the big picture in terms of rental accommodation. There's a lot of question marks over whether it will work in the first place, because whether people will be interested in securing these type of mixed developments, whether people will be interested in buying in an environment where it's a mix of rents and owner occupiers. But regardless of the nature of the models, Michael, I think the big picture is that, having these dedicated rental developments, I'm not sure. I mean, a lot of it reflects what has been researched in terms of models in Europe, particularly, yes, and the US. Australia really doesn't have that sort of ethos in terms of its accommodation. But as you said, the real issue here is, Michael, firstly, it's not going to make any difference to our rental position. It's certainly going to be a profitable proposition for big business, for developers, and whether that money could be used in a more directed affordable accommodation directly from governments, I think, is the question here. It's obviously been spruiked by those that want to get involved with these government concessions to build their developments. You'd have to have it pretty tight in case what happens if these developments can't find tenants because the rents are too high. The whole point here is, regardless of anything, it's not going to impact the significant issues Australia has with its rental market now.
Look, I agree with you. Developers aren't going to go into it unless they get concessions. And in particular, they're asking for land tax and depreciation concessions. Of course, if the government gives concessions, they've got to get the money from somewhere. And some of the people like you and me, are going to be paying our taxes. And as property investors, the government's using us as an ATM to support other property investors. I'm not sure that's a level playing field. I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Now, these build-to-rent units are being built, in particular Melbourne's the popular location, and Mirvac has just completed one, and apparently a really nice one across the road from Queen Victoria Market. And they're proudly saying that because it's such a good standard and because of the amenities in the building, they're able to achieve 20% higher rents than going rents in the area. So again, this isn't going to give affordable accommodation. Melbourne's got close to 5,000 built-to-rent units under construction and another 8,250 approved. Brisbane's got 1,750. Interestingly, Sydney haven't got as many in the pipeline at the moment. So it'll be interesting to see how it transpires. But having said that, neither of us can see it really making a difference to the rental shortage.
No, Michael, it's a proposition. It's a business proposition, and Mirvac and the other developers will make a profit out of it. That's what it's designed to do. They have to make a profit. That's their responsibility to their shareholders. The governments have to assist them in making that profit. Now, let's think a little outside the square since we're speaking about this. Why don't we give some incentives to small-scale investors, Michael? Hey, what about all that government largesse? Perhaps they're being wined and dined by the big end of town to get their build-to-rent propositions up and running. But why don't we start thinking about, hey, here's an idea. Let's incentivize small investors. Let's just reduce perhaps some of the imposts that we put on small investors to give them an incentive to get into the market. Now, we could be talking tens and tens of thousands of new small-scale investors that would be encouraged by positive tax position in terms of residential investors, but would ease, perhaps in a more substantive way, the issues that we have in our rental market. But of course, it's the small investor has been treated as some sort of a pariah over the journey by all our government agencies and bits and pieces, and they've been battered from pillar to post. Of course, we have the fleeing of a lot of small-scale residential investors to Airbnb, looking at short-term accommodation. I believe governments now are starting to think, well, maybe that's one way to get them back into the permanence, is to start making it tougher for Airbnb. But all these ridiculous policies that have been instituted, from higher taxes, higher levies,
higher interest rates.
Yeah, the credit squeeze, which was nonsense, was cheered on by the Reserve Bank. Geez, how many mistakes did that Reserve Bank make? APRA, and it's like, we've got to protect the banks from small investors. Well, hello, have a look at that rental market, which is now, it's got to be decades away from, under normal circumstances, having any semblance of balance because of all this, negative treatment of Australia's small investors. So why don't we just think a little bit more logically, and instead of a handful of developments being afforded the luxury of public money benefit, why don't we look at the small-scale investor and try to provide them with some more incentives? I'm sure there could be policies developed that would be a much more positive, or have a much more positive impact on our tragic rental market as it is at the moment.
And it would work much quicker, wouldn't it?
It would. Small private enterprise here, small-scale entrepreneurs, risk takers. It's what Australians do. It's what they've done. With 40% of our housing is private rental stock. What are governments all about? Where do these people come from?
At least they have now put rental freezes and rental caps off the books. They've actually clearly come out and said they're not going ahead with that. So that was at least a bit of good news for property owners, but also for tenants, because they would have had unintended consequences hurting tenants.
Yeah, I was almost surprised when they actually came out and said, no, rent freezes don't work, because I thought, oh, we're going to see this. We're going to see governments jump on the rent freeze bandwagon, which has been a disaster in Scotland, where it was instituted last year. So they've got lessons they can learn from actual initiations of these policies. But yes, thank the Lord that they've finally said no rent freezes, which would have been just another reflection of the appalling policy making in terms of property that has characterised Australia over the last decade or so. But we need to move more proactively to encouraging small-scale investors to get back into the market, not encouraging the big end of town to be creating boutique developments which aren't going to really offer any solution to Australia's rental crisis.
And because none of this is on the horizon, as you said a second ago, there's no end in sight for our rental crisis. Thanks for giving us the latest update from My Housing Market.
Thanks, Michael.